Alright, good day trader. Welcome to Glide Express Academy, and today we'll be looking at smart money's classical support and resistance. Alright, so without further ado, let's get into it. And I hope you will find this webinar interesting, helpful, and hopefully it's going to help you with the way you see the financial market. Alright, let's get into it now. So, what is support? As a forex trader, whatever asset class it is you're trading, synthetic stocks, crypto, whatever it is you're trading, the basic knowledge behind everything is your understanding of support and resistance. You know where your support levels are, you know where your resistance levels are. Now, I'm not going to be looking at support and resistance as a topic itself, but I just want to show you how smart money, how they view support and resistance. And the opposite of smart money will be dumb money, as we know it to be. Alright, so I'm going to be contrasting between the retailer's perspective and the smart money perspective. Now, a support level is likened to a floor, right? Price would have bounced up at least once for a level to be recognized as a support. So these levels right here, alright, I could have also drawn few more support areas inside this chart, but I don't want it to be too bulky, so I just want to maintain simplicity. So you'll see this area as an area of support. Price reacted here and bam, it bounced to the upside, and then it rallied down again, making a corrective move and then an impulsive move to the upside. Alright, then the logical thing in the retail universe is that when price is coming back inside that region, when price is coming back inside this region, there is an idea behind it, which you will see later, and all that. But what you should know in this slide is that the support level in the retail universe, or probably generally speaking, it's an area where price has bounced once or more than once, at least once. Now, how does retail traders view support areas? So now take this as an example. Price has bounced up here. Now, when it's coming back here, the signal in code will be to buy. So retail trader sees support level as longing zones. They want to go in. They want to go in a long position. They want to enter a bullish trade. So they're going to view price as price is going to react here. They're going to long, and when it comes back here as well, they want to long. And there's this popular notion in the retail universe that the more a level is tested, right? Now we're talking about the retail level, support level rather. The more a level is tested, the stronger it becomes. But I find this ridiculous. Now I'll tell you what. Now, if that were to be true, then support or resistance level should never be broken, because if it has tested here once, tested here twice, then the third time, then like that and like that, then it should forever go on. It should not be broken. If the more price tested that area, the stronger it becomes, then at the end of the day it should be as strong as the concrete. It should get stronger and stronger and stronger. But well, as you well know, that is not the case. That is not the case. From the smart money's perspective, the smart money sees the support area as area where the retail traders would have to keep their stop loss. So it's an area where liquidity resides. So if you're buying from this area, you're going to be putting your stop loss below here. If you're buying here, you're going to be putting your stop loss below here. If you're buying here, you're going to be putting your stop loss below here. So in order for the smart money is expecting this area to be broken, actually, not to be respected. Smart money is expecting a support area to be broken, expecting it to be broken, which eventually it will be broken. Okay, so, and just look at it here. You were given a little bit profit, see, to the upside, and then boom, it was broken, and all the stop losses here were raided. Okay, imagine you've obviously this was the first touch, so you're going to be expecting the second touch. So at the second touch you bought, all right, and the logical thing will be, now let's take away the notion that this is a weekly time frame. Okay, let's imagine it's just any time frame. The logical thing will be buy at the support and sell at the top. Yes, so imagine that even price did not get here. All right, probably you have your first TP taken out and your second TP set here, and price did not even take out your second TP, so you have half profit. You book half profit, that is if you're smart, and then the reversal to take you out, either if you haven't shifted your stop loss to break even. If you have, then it's a break even. If you have not, then it's at a loss. So you have your then for this time around, you're anticipating a buy here as a retailer. Okay, and after buying it here, you get a few profits, they lure you in, and then they break it, and then they break it, they take you out, take you out, take you out, and then they go down, they come back up. All right, so the smart money, from smart money's view, smart money doesn't see support areas where to execute an order, rather areas where to wait. We have to see what how market is going to purge out liquidity and where it's going to move. In the smart money's world, actually, the smart money's entry is basically the stop loss zone of the retailers. What am I trying to say? The retail world, this is your areas where your stop losses are, and then, but if I were to enter a trade like this, my entry will be around this area, around 74.56 area. Yes, because I know why there is this rejection in this area, and I know why price came to this area. Okay, so if I were to take it, but I would not be taking it for that reasons best known to me. All right, so that is how smart money views support areas. Resistance. Now you look at these areas, all right, resistance is always like the price ceiling, just the opposite of support. Support is at the bottom, resistance is at the top. Price ceiling, price floor. Now look at market, look at price rejecting here, probably forming a double top for you, and like, oh, that's a double top, we're gonna short it, and wow, good, you made money, short it. That's if you are lucky. Yeah, but majority of the retail traders will be expecting a comeback into this level, that is to touch this level again, so as to further reject it. And what happened? There was a rejection, little bit profit. Yeah. Again, the logical thing you're going to be expecting is that price should come into this level for you to take off your total profit. Okay, so let's look at it. Price came, it rejected, obviously, and it gave you a little bit of winnings. You went to bed, you went to sleep, you were happy, and then before you came back the following day or wherever, bam, price has already taken you out just at this point. So that's how the retail trader views support and resistance. Resistance this time around. So that typically what I just explained there. See, sell here. Whenever it comes back to this place, sell here, sell sell at the resistance, sell at the resistance, sell at the resistance. So how does the smart money view a resistance? A level of resistance. Now, whenever we see something like this, now when I use I trade the smart money concept way. All right, I don't trade the retailers way. I don't trade flag patterns, chart patterns, double top, double bottom, support and resistance, indicators, and the likes like that. No, I don't trade that. So In fact, I trade against it, and that's a lesson for another day. Now you look here, you see what does the smart money, what do they see when they see resistance? Typically they see this zone as a zone where your stop losses are, and of course they expect it to be raided, so they don't short at the point of resistance. They wait, second thought, quite good, all right. Patience is always the key, and then bam, you see this candlestick taking out all the stop losses. You see, you would always find it in the market, always. You see it after taking it out. Here is it. After taking it out, then you see a rush. Okay, so I didn't have this complete chart. I don't know why, but this is the gist. After price has taken out these stop losses, you can see the movement in price, right? You can see how price rejected from this point. So sometimes if you're taking it on a smaller time frame, say 5 minutes, and you took a shot here, you went to bed, before you woke up, you found price here, and only to find out that you've been taken out by this candlestick, and you feel like, why did it go my way? It went the way I predicted, but it took me out first. Yes, that is the dilemma of the retail trader, of trading the retail way of trading dump money. Okay, so that is how smart money views support and resistance. And to my conclusion, you can see this area, right, as an area of support, okay, and price taking it out and then moving further downward. That is, you would have been anticipating that price would come here. Yes, you would have been anticipating that price comes here. Yes, this is the concluding chart for this one. This is the concluding chart. So as you can see, price took out this series of stop losses here at this old high, and then rallied downward, and would have been, wow, why did price take me out again? Why was my order taken out? Why was my stop loss? Why was my stop loss hit? Why? The series, you begin to ask yourself, why? I'm telling you the reason. The reason is because you're trading the dump money way, and price is going to do that. Market is going to deal with you. In that way, it's going to take out your stop loss and it's going to reverse. And a lot of times in the retailers, what they call it, stop on. I don't know. So there you have it, and then you can see this resistance levels again, right? You can see you're anticipating market to buy. You enter a signal group and say buy aggressively, and you bought aggressively with everything you have. And then it came again and said buy aggressively, you bought aggressively, oh, you made profits. And then when it's coming back here, buy aggressively, probably you went and borrowed more money because you felt, yes, it has worked here, it's going to work again, and it gave you a little profit. You're happy, you went to bed, and bam. See, price coming down to take out all your stop losses and back up. And you feel, I knew it was going to go up, I bought, but it took me at first. Yes, will. So, and then we are here. Then price coming back inside this area, then continue downward. Alright, so there are other things I want to talk about. And if you hang around a lot more, you're going to have premium content on this channel. So that is all you have from me for today. This is Glidex Forex Academy. Please hit the subscribe button. Follow us on Facebook, Glidex Forex Network, and see you at the top. This is not a financial instruction, all right? This is not a financial advice. This is a webinar for educative purpose, all right? So whatever you choose to do with it, I'm not liable for any loss thereby. All right, so thank you very much. See you in the next webinar.